Swayam Prabha. Digital India. Educated India.
Yogah karmasu kaushalam.
Dear students, I, Dr. Dhaval Nakum from Gujarat University welcomes you to the session on Fundamentals of Accountancy Part 2. In the first part of Fundamentals of Accountancy, we acquired information about relevance of accounting for a BBA degree. Accounting is a subject or education is not confined to the specific users. It is needed everywhere, whether in a household or business, small business versus big business, business unit versus non-business unit, etc. Then we talked about the inception and evolution of accounting. Then we talked about the meaning and definitions of accounting, characteristics of accounting, and it explains the formation and working process of accounting. And then we talked about the objectives of accounting, advantages of accounting, and lastly the limitations of accounting. In the second parts of Fundamentals of Accountancy, we will discuss methods of keeping books of accounts, difference between bookkeeping and accounting, users of accounting information, and few of the terms of the accounting. Methods of keeping books of accounts. Over time, various new concepts have been introduced in accounting to make it easier and more comfortable. There are two types of accounting in practice: Deshi Nama system and then double entry system. In case of Deshi Nama system, it is an Indian system for maintaining books of accounts. Due to the rise of computerized accounting system, the double entry system is widely used and the Deshi Nama system is gradually becoming obsolete in the accounting profession. Second is double entry system. In this form of accounting, every transaction has debit and credit effect according to accounting norms. It is widely used method. A third method of accounting is the single entry system. This system does not follow the rules of accounting as followed by the Deshi Nama system and double entry system, and thus it is not accepted by different authorities. Both the Deshi Nama and double entry system are different in terms of the presentation of accounts, but the rules and principles are identical. Both types are permissible. Currently, the double entry system is more popular than the Deshi Nama system because accounts are now prepared through computers rather manually written. Computer based accounts are prepared under the double entry system only. We will talk about the Deshi Nama system. It is an ancient method of writing accounts generally used by the sole proprietors and partnership firms. Gradually the use of this system is declining. In case of double entry system, according to historians, the mathematician Luca Pacioli of Italy is considered the father of the double entry system. Deshi Nama system, which is followed by the small traders, this system is not longer in use or having restricted use, whereas double entry system, which is followed by the most of the organizations, and this system is computerized and provides quick computation and desired information. To understand the double entry system, it is essential to grasp its basic debit and credit rules. Basically, there are three types of accounts and their respective rules of debit and credit, which are discussed in detail subsequently. These accounts and their rules are the pillars of the double entry system. A correct and full understanding of these accounts and their rules leads to a complete understanding of the double entry system. Under the double entry system, each transaction has two accounting effects. One is debit and the other one is credit. There is well prescribed set of rules for what to debit and what to credit. Under the double entry system, three different bases are used for the preparation of final accounts: mercantile base, cash base, and lastly the mixed base. The first one, accrual or mercantile base. When accounts are prepared under this method, all transactions of that respective accounting year are considered. Next, transactions pertaining to receipts, payments, liabilities and assets are included. Then income and expenses of the respecting accounting year are considered, including outstanding income, outstanding expenses, expenses paid in advance and income received in advance. Only the incomes and expenses of that particular accounting year are considered, including receivable incomes and payable expenses of the current year. Cash income and cash expenses related to the previous year or the next year are not considered to determine the profit loss. Transactions of the previous year are recorded in the previous year and transaction of the next year will be recorded in the next year. For example, assume that accounts are prepared for the period of 1st April 2023 to the 31st of March 2024 and a salary of rupees 5,000 is paid every month. Further assume that the salary of March month is outstanding. It will be recorded as follows: salary paid for 11 months, that is rupees 5,000 multiplied by 11 comes to the rupees 55,000, and salary outstanding for 1 month, that is March month, is rupees 5,000. Here total expense considered for the whole year 23-24 is rupees 60,000. In practice, excluding certain sectors, most sectors maintain their accounts under the mercantile, that is accrual system. This is very popular method. The second method is cash or receipt base. When accounts are prepared under this method, following three aspects has to be considered. First one, only cash transactions of that respective accounting years are recorded. Second is, cash transactions of that accounting year include transactions pertaining to receipts, payments, liabilities and assets, and then cash transactions of the previous year and the current year are also considered, which are not considered in case of the accrual method. The use of this particular cash method is very limited. Third method is hybrid method, which is also known as the mixed method. This method is a modified version of the mercantile system, known as a mixture of mercantile system and the cash system. This method is not popular in India. Generally, companies maintain their accounts under the mercantile system, and as per Accounting Standard 1, companies certify that the accounts are prepared on mercantile basis only. Difference between bookkeeping and accountancy. First, let us understand the difference between accounting and accountancy. Accountancy is a knowledge system, whereas accounting is the action or process. The accounting process is carried out based on the rules and principles framed by the accountancy. Thus, it may be said that the accountancy is the knowledge system of accounting and accounting is the application of accountancy. Now, we will study about the difference between bookkeeping and accounting. In society, some people mistakenly consider bookkeeping and accounting as synonymous terms. However, they are different from each other. Bookkeeping is the recording phase, while accounting is concerned with the summarizing phase of an accounting system. Bookkeeping provides necessary data for accounting, and accounting starts where bookkeeping ends. In other words, bookkeeping is a part of accounting. Let us see the point-wise difference between bookkeeping and accounting. The first reason or point of difference is territory. Bookkeeping is associated with the identification of transactions and events, measuring them in financial terms, recording them in books of accounts and classifying them. Whereas, in case of accounting, accounting is associated with summarizing the recorded transactions and events. Further interpretation of them is also undertaken, and after interpreting, the results are communicated to the stakeholders. The second point of difference is phase. It is the in case of bookkeeping, it is the primary phase and forms the basis for accounting, whereas in case of accounting, it is the second stage starting where bookkeeping ends. It is considered the language of business. The third point of difference is purpose. In case of bookkeeping, it deals with appropriate and systematic maintenance of records of financial transactions of the unit, whereas accounting, the purpose of accounting is to ascertain the results of operations performed by the organization during the respective accounting period and the financial position of the organization. These results are communicated to stakeholders. The fourth point of difference is decisions. In case of bookkeeping, managerial decisions cannot be taken with the help of these records, whereas in case of accounting, managerial decisions can be taken with the help of these records. The fifth point of difference is nature of job. In case of bookkeeping, it is considered to be routine in nature, whereas in case of accounting, it is analytical and dynamic in nature. The sixth point of difference is assignment of job. In case of bookkeeping, it is considered as a routine task. It is performed by the junior staff only, whereas in case of accounting, it is considered as a specialized work and it is performed by the senior staff. The seventh point of difference is subfields. In case of bookkeeping, there are no subfields in the bookkeeping, whereas in case of accounting, it has several subfields like financial accounting, cost accounting, management accounting, etc. And the last point of difference is special skill. In case of bookkeeping, it is a mechanical work in nature and thus does not require special skills, whereas in case of accounting, accounts are analyzed and interpreted, thus special skills are required. The given picture explains that accountancy includes accounting and bookkeeping, and further accounting includes bookkeeping. The accounting information of the corporate sector comes to the public domain after the completion of the statutory procedures. Therefore, accounting information can be used by any common man. Some stakeholders have a specific interest in the annual accounts of business organizations. Let us acquire information about the users of accounting information. Users of accounting information and their needs. The form of business has evolved from sole proprietorship to partnership form and from partnership form to the company. Due to this development, the boundaries of the use of accounting information have also extended. Accounts made by sole proprietors or partnership firms are typically to meet their personal and legitimate requirements. In these forms of business, owners and management are generally the same entity. So, the use of information is only confined to them only. In the company form of business, owners and management are different entities. Because of government regulations, the information of companies becomes public information. Therefore, there are several users of accounting information. This accounting information is provided in the form of an annual report, which is provided every year to the users. This report includes qualitative, which is also known as the non-financial data, and quantitative, which is also known as the financial information. The qualitative information includes report of the board of directors, chairman's or managing director's address to the shareholders, management discussion and analysis, and report of the auditor. Whereas, in case of quantitative information, it includes income statement, balance sheet, cash flow statement, and consolidated financial statements. Users of accounting information. Users of accounting information are majorly categorized into two groups. First is internal users, which includes management, existing shareholders and employees, whereas the external users, which includes potential shareholders, creditors, tax authorities, customers, foreign enterprises, regulatory bodies, professional bodies, researchers and analysts and government, etc. We will start with the management. The company form of business is part of the corporate sector. In the company form, equity shareholders are the owners because they provide capital, but management is done by the board of directors. All shareholders cannot manage the affairs of the company, Thus, the law provides that the affairs of a company shall be managed by the board of directors. The effects of policy decisions made by them are reflected in the accounts. Whether they have achieved their goals or not can be determined from accounts. Their function is to achieve predetermined goals through planning and control. They identify variances by comparing planned estimates with actual results and take corrective measures to avoid repetition of these variances. Accounts are the best tool to measure the efficiency of management. Management can be classified as internal users of accounts. Therefore, accounts are very important for the management. The next user of accounting information are existing shareholders. They are the real owners of the company. Final profit and loss are distributed and borne respectively by existing shareholders. As per the legal provisions, management has to provide a certified copy of accounts to all shareholders within a prescribed time period. It is the right of shareholders to obtain a copy of accounts, and at the same time it is the duty of the company management to provide it. Shareholders analyze published financial and non-financial information and review their investment decisions in the company. They can learn about the development and forecast the future of the company. They decide whether to dispose of or retain their shares based on these information. Now, companies have started to send annual reports via email for environmental protection purposes. This group is internal users. The next users of accounting information are employees of the company. From the company's accounts, employees can acquire information about salary improvements, bonuses and job security. Generally, profit in the accounts is important for employees. They present their demands to management based on profit. If the business enterprise's economic condition is sound, they can estimate the security status of their employment and the company's development. In this manner, accounts are useful for them as well. This group of user of accounting information is also internal users. The next users of accounting information is potential shareholders. When a company has expansion plans, this group of investors would like to evaluate different financial aspects of the company. This category of shareholders desire to buy shares from the primary and secondary markets. They use annual reports of the past and current years to determine whether their investment in the company will yield the expected return and whether the company's financial position will grow or not. The next user of financial informations are creditors. There are two types of creditors which are associated with the business organizations: creditors of expenses and goods and lender of funds. Short-term creditors provide goods on credit to the business enterprise, whereas long-term creditors includes financial institutions and debenture holders from whom long-term funds are borrowed. These parties need to collect their dues from the company in the future. They use published account to understand the company's present and future earning capacity and economic condition. The next user of accounting information are tax authorities. Different types of taxes are collected by the government based on business income, activities and other factors. Taxes are of two types: direct and indirect taxes. Income tax is a direct tax, whereas GST is considered as an indirect tax. To collect these taxes, the government makes provision in the annual budget. Tax payment liability is determined from annual accounts. Tax authorities examine whether the tax paid by the company and recoverable amount of taxes are accurate and whether all provisions pertaining to tax payment are followed. They also examine cases of tax refunds to ensure appropriateness. The next users of accounting information are customers. Customers are significant component of profit creation. The existing market is a buyer's market, not a seller's market. Various laws protect customers' rights regarding purchased products. They are aware of the product and service prices as well. and customer can get an idea about the price of products or services from the company's account. Thus, accounts are useful for customers as well. Next user of accounting information are foreign enterprises. Due to advancements in communication and transportation, the world has become smaller. Economic restrictions have been liberalized, encouraging foreign enterprises to sell their products or services in other countries. They are also interested in amalgamation with companies in other countries, and before making such decisions, they examine aspects like solvency, liquidity, and profitability of the respective company. After these analyses, they make their decisions. Therefore, accounts are important from the viewpoint of foreign entrepreneurs as well. The next user of accounting information are regulatory bodies. Regulations are required to maintain uniformity and consistency in the functioning of any system, especially those associated with the public. To protect the interest of the common person, these regulations are needed. These regulatory bodies like SEBI, Securities and Exchange Board of India, and IRDAI, Insurance Regulatory and Development Authority of India, are established to regulate companies' functionings. These bodies use accounts for preparation of rules and guidelines and examine whether accounts are prepared as per the norms or not. Therefore, accounts are essential for regulatory bodies as well. The next user of accounting information are professional bodies. Account preparers are known as professionals. Accounting is a profession and each country has professional bodies to manage it fairly. Since 1949, the Institute of Chartered Accountants of India (ICAI) has been functioning for the accounting profession in India. This body prepares guidelines and develops accounting standards to maintain uniformity and integration in preparation of accounts. Additionally, the Institute of Company Secretaries of India and the Institute of Cost Accountants of India provide necessary suggestions for preparing transparent accounts. To promote transparency and full disclosure, ICAI arranges competition and awards for the best prepared accounts in the corporate sectors. The next user of accounting information are researchers and analysts. Researchers and analysts form a category of users of accounting information. They are interested in knowing the profitability status and solvency of the companies. They undertake intercompany and intra-company comparisons and evaluate financial performance. They also conduct research and analysis to ascertain the probable reasons for current profitability, economic stability, cash flow movements, etc. This group works not only for its interest but also for the benefit of other stakeholders like existing and potential shareholders. Institutions determining creditworthiness such as CRISIL, CIBIL and ICRA also use published accounts and disclose their findings and recommendations to concerned stakeholders. The next and last user of accounting information is government itself. The government is responsible for managing the economy efficiently and effectively. It forms policies for the country's development requiring relevant information. The information presented by companies is collected and used for national policy formation. This accounting information plays a vital role in the government's policy oriented decisions. Every field of education has its own terminologies. These terminologies are well explained and are to be understood in the given context only. These terminologies are called the terms of the respective field. The subject of accounting also has its own terminologies. Let us see these terms and their meanings. Terms of accounting. The first term of accounting is business transaction. A business transaction is a financial transaction between two or more parties that involves the exchange of goods, money or services. To engage in a business transaction, the business exchange must be measurable in monetary value, so it can be recorded for the accounting purposes. Business transaction is always the economic transaction. Business transaction can be done in cash form and on credit as well. In case of cash business transactions, either cash is paid or cash is received as the case may be. In credit transaction, cash settlement is done in future. We will see the example of the cash transaction of business. Goods of rupees 75,000 sold to Prashant for cash. This is an act of business. Cash is received against goods. Its economic value is rupees 75,000 and this is business transaction. Here Prashant is a separate person, goods is a product, rupees 75,000 is economic value which is received on the spot and money is exchanged against the goods. All conditions of business transactions are fulfilled. Credit transaction of business. Now let us see the credit transaction of business. Goods of rupees 75,000 sold on credit to Prashant with condition to pay the amount within 15 days. Goods sold on credit, money of which is receivable within 15 days, this is a credit business transaction. Here Prashant is a separate person, goods is a product, rupees 75,000 is economic value which will be received after 15 days, money will be received in future against good, this is a guarantee. Now the second terms of accounting is event. There is a difference between transaction and event from the viewpoint of accounting. Event explains result of transactions and transaction is action, while event means situation or result emerge from the transaction. Transaction has its own explicit features. For example, goods sold to Bharat for rupees 75,000 and it was purchased for rupees 45,000. Wages are paid rupees 12,000. Now let us understand transaction and event from this particular example. Here we have sold goods of rupees 75,000 which is a sales transaction and these sold goods is purchased for rupees 45,000 and wages of 12,000 is paid, means total of 57,000 is our expense and both are again also the transactions. If we deduct the income, that is sales of rupees 75,000 from the expense of rupees 57,000, we get the result, that is profit of rupees 18,000 which is considered as an event. The third term of accounting is capital. The inception of any organization is with the introduction of capital. Capital is finance or funds provided by the owners of the business organization. Without capital, business cannot be commenced. It is financial asset. It is not necessary that capital is to be provided in cash form only. Any kind of relevant personal asset provided by the owner to the business can be considered as the capital. An investment made by the owner to commence the business is known as the capital. All those items are included in capital which is provided by the owners and their value is measurable in terms of money. For example, to commence business, owner has brought rupees 50,000 cash, stock of rupees 45,000, machine of rupees 90,000, furniture of rupees 85,000. Total capital of owner will be addition of all these cash and assets, that is rupees 2,70,000. Items provided by the owner, each of them has a monetary value. In sole proprietorship, capital is provided by the owner, whereas in case of partnership firms, capital is provided by the partners, and in case of company firm, the capital is provided by the equity shareholders. The next term of accounting is drawings. There are two forms of business, corporate form and non-corporate form. The term drawing is applicable to non-corporate form of business. This term is applicable to sole proprietary firm and partnership firm only, which are non-corporate form of business. For creation of capital, owner of business provides his personal property to the business. Personal assets, that is properties given by the owners, becomes the assets of the business. When owner of business withdraws assets from business means cash or goods for personal purpose, this is known as the drawings. Drawings indicate capital reduction, and instead of deducting it directly from the capital, it is shown separately as drawings. From the figure, it can be shown that owner provides cash and other assets to the business is called as capital. Here business is receiver and owner is provider. Whereas when owner withdraws cash and other assets from business is called as drawings. Here business is provider and owner is the receiver. There are other terms of accounting and we will discuss them in next module. It means in part 3 of fundamentals of accountancy. Let us recollect the discussion of this module. This part 2 covers methods of keeping books of accounts, where we have acquired information about Deshinama, double entry system and single entry system. In present time, computer based double entry system is widely used. Single entry system is not permitted by the government authorities. Deshinama and double entry systems are only the permitted methods. Then we have discussed about the basis for preparation of accounts. In practice, 3 bases are used: accrual base, cash base and hybrid base. Accrual base is used across the globe. Then we have discussed about the difference between bookkeeping and accounting. In accountancy, where bookkeeping completes its work, the function of accounting starts. Accounting includes bookkeeping, and accounting is broader term than the bookkeeping. Then we have talked about the users of accounting information. Accounting information is used by internal and external users. In corporate sector, accounting information is available in public domain. Different stakeholders are using accounting information for their customized requirements. And then we talked about the few of the accounting terms. Every field of education has its own terminologies, and these terminologies are well explained and are to be understood in the given context only. Here 4 terms are studied and remaining are to be covered in part 3 of fundamentals of accountancy. In the third part of fundamental of accountancy, we will discuss about the remaining terms of accounting. We will meet for the part 3. Till then, keep on refreshing part 1 and part 2, and for better understanding of subsequent parts. Thank you.